Welcome to Discovery Watch with John Kaiser.
I'm Jim Goddard. John, welcome back to the show.
Jim, I'm glad to be back.
John, in July, the Moose Cree First Nation held an election that ousted the anti-mining chief who blocked efforts by Niobium Metals to work on its James Bay Niobium project. Is Niobium any closer to getting a social license from the Moose Cree?
Jim, it's taken a little longer than I thought, following that election, but progress has finally been made. They have set November 18th as the day for a community meeting where they're going to review a study they commissioned about the potential impact of, doing work on the James Bay Niobium project will have for the community. And they've also withdrawn the application for a judicial review that the ousted chief had filed earlier this year after the Ontario Mines Ministry granted a permit for an 8-hole drill program on the deposit. And Niobium had been trying to get this permit for 2 years and had tried to do consultations with the Moose Cree First Nation, but the chief, who is against mining in principle, had refused to engage in any consultations. So the Ontario Ministry got fed up and granted the drill permit. At which point, she and a couple other people then filed this complaint alleging that Niobium never engaged in consultations with the Moose Cree First Nation. Well, when the election happened, she got tossed out. A more reasonable group of people were put in charge of the town or dominate the town council, and they are now approaching it from an open-minded, rational perspective. And they are hoping to sign what is called a protection agreement with Niobium, and that's their term for an agreement that Niobium is not going to do anything without their support for what they're doing. And so the trick now for Niobium is to convince the Moose Cree First Nation that this program, which they hope to start in late January, will not cause any problems. And they posted a letter to Facebook explaining the whole thing. There's a lot more detail on that, but their view is they don't want government agencies such as some judge deciding what's going to happen to them. They want to be part of the process. And when you're dealing with First Nations and the mining sector, you basically have two perspectives. One is what's in it economically for us, and what is the environmental price that our backyard is going to play. Now, originally, this deposit is like some 50 million ton deposit, 0.5% niobium. It could have been an open pit mine, but when this was first had a feasibility study done in the late 60s, that was conceivable, and they never proceeded with it because the niobium price was pretty low, because that's what the CBMM set it as a result of its Araxá deposit in Brazil, which is about 5 times higher grade and of course enormous. So CBMM supplies 85% of all niobium in the world, which is now a $3 billion market and growing. Now, the concern that the Chief Patricia Ferries had was mining is bad in general. And it's a bit of a hypocritical attitude, because if you can keep mining away from your backyard, you are in essence forcing it to be done somewhere else where perhaps rules are less tougher and there are more downstream costs than if it was in your own backyard. Now, you can say, well, they still probably won't want a niobium mine in their backyard, but I would argue that niobium is something different than gold. If this were a gold mine, people in the community could argue, what does the world need more gold for? There's already 6 billion ounces out there, and all the gold bugs want gold to go up. Well, one way for gold to go up is to make a global ban on mining more gold. and then gold can rise as demand for it increases, and not always have miners digging more of this useless stuff out of the ground and selling it to those who want it. So gold really, bringing more gold above ground doesn't create any particularly identifiable good. But niobium is used to strengthen steel. It's an alloying agent, and if you strengthen steel, you make it lighter. And the automotive industry sucks up about 25% of the $3 billion annual supply of niobium. And that's because the weight matters for anything that moves, because it costs energy. But niobium also goes into big, bulky steel stuff like pipelines and bridge girders, and even those you have to move from where they are produced to whatever location that the permanent installation is being made. So if you can strengthen it with niobium, you reduce the volume of it and therefore the weight, and there you have another energy saving. So in supporting a niobium mine in their backyard and doing it in a way so that the local environmental impact is minimal and there are economic benefits for the Moose Cree First Nation community, they also get the bonus that they're facilitating something that actually does a good thing for the world, because the niobium enables less energy to be wasted moving things around without any compromise in the functionality of the material. So I'm optimistic that before Christmas they will have a protection agreement that they will allows them to go in there and drill these 8 holes. The project already has over 85 holes drilled to about a 275-meter depth, and a 225-ton bulk sample was extracted back in the late 60s. But since then, Niobe wants to do 2 things. One, they want to focus on the higher grade core of this deposit, where they would like to do something like a 3,500 to 4,500 ton per day underground mining operation. The core has a higher grade. It can get up to 0.7, 0.8%. But in the 50 years since the metallurgy was done on this, there are new concepts at work. So they want to conduct metallurgical tests on this material to see if recoveries can be even better and the costs reduced. So the big question, and we'll likely get this grade in this 0.7% niobium range, but the question will be, what is the cost of recovering the niobium? And the plan is to do some sort of flotation facility at the site to produce a concentrate, and that will be trucked or railed to another location where it will be converted into ferroniobium, which is the primary form in which niobium is fed into the steel mills to make a niobium-strengthened steel alloy.
We'll have more with John Kaiser right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with John Kaiser. John, Tri-Origin Exploration announced that De Beers plans to drill targets on its South Abitibi project without signing any option agreement. Since when does a diamond producer do something for nothing?
This has been a real head-scratcher for everybody, and I called Bob Valiant of Tri-Origin and asked him, why would De Beers agree to spend its own money on your property and give you the data without having some sort of title rights. And he explained that what they mean by having a standard that they will negotiate a industry standard agreement is that they've already sketched out the rough outlines of the sort of deal that if De Beers likes what it's finding there, we'll sit down with Tri-Origin and hammer out the specifics. De Beers doesn't want these details out there. It's engaging in some sort of experiment on this property. But I pressed Bob and said, what is an industry standard agreement? I see all kinds of agreements. I see these horrible farm out deals to some major where it can like spend $10 million over 8-9 years and eventually earn like 80% of the property. And then the junior, if it's for real, then the junior still has to cough up 20% and end up, being diluted down because the market just doesn't care about, 10 to 20%, temporarily carried interest. And he said, well, I do understand what I have a different version of industry standard than what these other companies might have. Tri-Origin is primarily a base metals and gold exploration junior focused on Ontario. Diamonds are something that it does not want to get involved with. Bob Valiant used to work for Lac Minerals way back in the 70s, and Lac Minerals was engaged in diamond exploration, so he has some familiarity with what is involved, and he's also has paid attention to how the diamond game in the last 30 years here has unfolded, and that if you want to be a junior partner in a diamond exploration project, you need to have the ability to be carried as far as possible, ideally even have the major put up your share of construction costs. The earliest example was Diamet, which ended up with a deal where it would net 29%, but it was required to contribute its share, which turned out to be more than 29% because Stu Bluffson and Chuck Fipke got carried 10% interests each after BHP spent $500 million. And so they ended up having to raise a lot of money because these projects end up costing an enormous amount. So Bob Valiant understands these things. He also understands that it's nice for the junior to have a choice as to whether to stay at this level and contribute this share or dilute down and let the major contribute the next share. So he's keeping these terms confidential because that's what De Beers wants until they actually do it. The access agreement is for a year, and if they publish some data that they found some kimberlite and it looks interesting, and Rio Tinto comes knocking on the door, well, I suspect there is some sort of right of first refusal agreement where De Beers, if Rio Tinto were to offer a better deal for Tri-Origin than what's sketched out in this outline, De Beers would do that unless it's such a bad deal for the major that it says, okay, you can have it. Now, you ask yourself, what about the company suddenly saying, I like this so much, I'm going to keep it 100%. And that raises the question of, what does De Beers want with the diamond potential in this area? Now, the area between Cobalt and Kirkland Lake, that area has had dozens of kimberlites found since the 60s and 70s. They are only modestly diamondiferous. None of them has ever had a feasibility study done on them. This is not like the Victor deposit, which is up in the Ottawa-Piscat area. This area, the New Liskeard field, the Kirkland Lake field, these are kimberlites, but they're not very interesting. But what is interesting is that just south of Cobalt, there was an 800-carat yellow diamond called the Nipissing diamond that was found by a priest, and where it came from has never been figured out. Now, the ice direction is from the north, so presumably it came from somewhere in the New Liskeard field, where the best pipe was the 95-2 pipe that Contact Diamond had before before it was absorbed by Stornoway. That was about 30 million tons, but the grade was down there, less than 10 carats per 100 tons. So diamonds are in a really bad space right now. De Beers, for the first time ever, has reduced the price of its diamonds in its sites because the difference between polished diamonds and rough diamonds is shrinking, putting enormous pressure on the middlemen who polish the diamonds and resell them. And the cause is the arrival of synthetic diamonds, which in the various size ranges are cheaper, much cheaper to make than to find natural diamonds. And for a lot of consumers who are just interested in the bling, why would they pay higher for a natural diamond when they can get a synthetic carbon version of it considerably cheaper? And so the diamond sector is ailing. And so why is De Beers looking in this area south of Cobalt where there are no kimberlites known? There's a couple of diamondiferous lamprophores to the southeast of Cobalt, but there's really nothing there. And if you go to my website and go to the Diamond Resource Center, you'll find I've got a Google map with icons indicating the locations of all the kimberlites in the world that Stéphane Faure compiled. You can zoom in on this area and see where everything is, even find out the details about it. Anybody wants to do that, they should do this sooner than later, because this functionality disappears in December when Google pulls the plug on it. But what's interesting in my view, and I'm purely speculating here because De Beers has not shared with Bob Valiant why it's interested in this area. The new game for diamonds are the Type 2A diamonds, like the Lacidi La Rona diamond that Lucara found in the Corot pipe. It was about 1,100 carats, and the broken piece was another 800 carats. These are now understood as coming from very, very deep, super deep diamonds, between 400 and 600 kilometers. In conventional diamond populations, such as the peridothitic and eclogitic types, they're found somewhere between 150 and 250 kilometers, usually in the center part of an Archean crust. But what they are now thinking is that these diamond populations, Type 2A, which have no nitrogen and produce very large and very clear diamonds, high-quality diamonds, they are younger than these other diamonds that make up the bulk of the macro grade in commercial diamond mines. And it is believed that the oceanic crust ends up being subducted under the continental crust, literally underplating, getting pushed right down to depths of 600 kilometers. And with that carbon crust, with that ocean crust, comes a carbon payload, which may contribute to the growth of these very large diamonds under these unusual conditions. And this, of course, means that if you have Type 2A diamonds in your diamond pipe, they are a population completely different than make up the most of the diamonds. And Stephen Haggerty has just published a paper arguing that, in fact, even microdiamonds, the ones smaller than 0.5 millimeters, they're very sharp-edged octahedral, unlike most of the diamonds that make up the macro commercial population. He says these ones are actually Type 2A diamonds, meaning they're originating way down deep. So when you have a kimberlite come up, the magma starts very deep, picks up these Type 2A diamonds if they're available, then goes shallower and picks up the other diamond populations along the way, mixing them up, and then when it erupts with the violent emplacement, it gets mixed even further. So the different diamond populations end up completely blended. But if you are in an area where there are only super deep diamonds, Type 2A, and not much in the form of the more conventional diamond populations, you're never going to see anything representing a meaningful macro grade. And the Letseng pipe and the Mothé pipe are examples of this. These things are less than 5 carats per 100 ton and don't show much in terms of size distribution curves. So I have a suspicion that groups like De Beers are revisiting areas which have been found lacking in terms of the more conventional high-grade diamond pipes that have been the foundation of the diamond mining industry, and are looking for places that might have these type 2A diamonds, which are these populations with very large, high-quality diamonds, where the rarity of it being a natural diamond is going to be the key reason to own it, because who wants to wear a golf ball-sized synthetic diamond? I mean, that sort of bling is not that of what the rich people are interested in. So I think De Beers is taking a look at this area, and there's another reason, too, why this area may get a fresh look, because the whole project, the reason Tri-Origin owns the Nipissing and the South Abitibi blocks, is that this area was under the Bear Island Caution from 1970 until 2000. It was related to First Nations issues. Those were subsequently resolved. But during those decades, there was no exploration. So the earlier wave by Monopros, which was the De Beers subsidiary in Canada, they did not have access to this area. And in the 90s, when all the juniors got into the game, well, they focused more on the newly scarred area where groups like Trésor were active. And nobody really looked in the southern area because there wasn't really anything known. But Bob Valiant developed this idea that the cobalt implate, which is this pile of sediments that have silver and cobalt veins, sort of west of Cobalt, going all the way to the Sudbury area, it can get down to 6,000 meter thickness, but in the area to the east, the thickness is maybe only several hundred meters. So the land packages he staked were based on the theory that under this stuff, this 1.8 billion year old cobalt plate, there is Archean rocks, basically an extension of the Abitibi Greenstone Belt, and they attracted Sumitomo in 2015 to do a 50-50 joint venture with Sumitomo funding everything, and the idea was to fly a geophysical survey, 100 to 200 meter line spacing, and then drill test targets that could be VMS deposits or potential gold-holding structures. And this was all undercover exploration, pretty much blind at surface. Sumitomo, after spending about $2 million, pulled out at the end of 2018. They did confirm that this is a viable concept, but they did not actually intersect anything that qualified as a discovery. So Tri-Origin still regards this whole concept as valid and waiting for the day when suddenly there are exploration dollars for undercover type exploration. He was a bit frustrated that because Sumitomo was never interested in the cobalt potential, and this area was swarmed by juniors all looking for high-grade cobalt when they jumped onto the cobalt bandwagon. But the cobalt price is now half of what it was during the boom of 2017 to 18, and so now he's suddenly out of the blue comes De Beers with this offer. We will explore your project for free. We'll do a reasonable deal. That's a win-win for the junior and the major if we do find something interesting. And it's completely unexpected, and his land position of over 30,000 hectares is substantial. De Beers apparently has its own database because it already had targets. It is drilling them right now. And for Tri-Origin to keep it for itself, unlikely to happen, because if De Beers gives them a dump of data, it'll be a whole bunch of geological and geochemical mumbo jumbo, and it probably has its own internal theories as to whether a kimberlite has potential for these type 2A diamond populations. But on the other hand, maybe this is an area that was never properly explored because of the land caution, and maybe there are pipes here that are going to be more conventional and richer. But it's interesting to see a little junior like Tri-Origin, which has a number of interesting projects, but is hamstrung by its 2 to 3 cent price, suddenly out of the blue have this very intriguing diamond play being done by De Beers. And keep in mind that type 2A diamonds are what make the Fort de la Corne pipes tick. Rio Tinto's earning into Star Diamonds for the La Corne projects because they have a high value thanks to the presence of a Type 2A diamond population. And the Saskatchewan Craton isn't exactly the first place in the world where you would go to look for major world-class diamond pipes, but the grades are low, but they have these high-value diamonds. So it'll be interesting to see if the search for Type 2A diamond populations in areas that don't make the grade in terms of conventional diamond populations is going to be the wave of the future. And since De Beers is paying the shot for this one, Dry Origin now should be watched very carefully to see if there is new life for diamond exploration in Ontario.
We'll have more with John Kaiser right after this.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with John Kaiser. Namibia critical metals nearly tripled during the past week. Has the junior made a big discovery?
Jim, I wish that were the case because I own shares, and Namibia Critical Metals is a bottom fish spec value ranked favorite of Kaiser Research. But they haven't accomplished anything worth reporting this year so far. Their last announcement was in March, when they said they were shifting the focus to the Grootfontein Mafic complex and the Otjiwarongo project. Both of these are grassrootsy plays. In early 2018, when they completed the acquisition of the project portfolio from Gecko, the South African company, and to become their Namibian exploration arm, their focus became the Kunini copper cobalt project in northern Namibia. And the allure then was that cobalt was $30 to $40 per pound. Celsius Resources had done an earlier deal with the Gecko Group on the Opuwo project, which sits to the east, and they had actually developed a significant resource. And Namibia Critical Metals hoped to find at the minimum something similar to the west, and even better, a feeder zone where the grades get even higher. But their exploration work last year showed that the feeder system just really didn't have any high grades where they thought it would, and the dolomite horizons weren't as good as those from Celsius. Meanwhile, Celsius, ASX listed 800 million shares out, trades for a penny and a half or so after being as high as 30-40 cents at the beginning of 2018, and that's primarily as a result of cobalt prices crashing down to the $15-17 a pound level. So why did the stock go up? Well, the main reason it is a favorite of mine, or has been for a long time, is that they own the Loftal heavy rare earth deposit in Namibia, and it has it is relatively low grade, 0.5, 0.6% total rare earths, but it is 90% of the heavies, and there are not many such deposits in the world. China is the primary supplier of heavy rare earths. There's a few out there, such as the Strange Lake deposit in northern Quebec and Labrador, which have a very meaningful heavy rare earth component. But for metals like yttrium and dysprosium and terbium, the more conventional light rare earth deposits do not have a large percentage or meaningful percentage of these particular rare earths. So I figured if there ever was going to be a problem with China supplying heavy rare earths, this deposit would be the one that would be amongst the first to be developed. But one of the things that went wrong in the last few years is that yttrium, which is the heavy rare earth that is most dominant, it lost a lot of its applications to the LED market in the lighting sector. So the yttrium prices are really, really low. And unless they go up, 3-4 times in price, these heavy rare earth deposits just won't make it. Now, there's a possibility something like that can happen. There's a solid state magnesium ion battery that was developed here in California. That's in early stages, which would use yttrium as part of the electrolyte, and that could create enormous demand because everybody wants a substitute for the lithium ion battery, a magnesium ion battery that doesn't have the fire hazards of a lithium ion battery would be snapped up in an instant. But that's still very early stages. So the reason the stock went up is that Casey Research put out a recommendation saying that apparently to the effect that the rare earth Mania 2.0 is going to become reality. And of course the reason is the relationship between China and the United States. And China rattled the cage in May, and that's what prompted me to get my Rare Earth Resource Center up to date, and it's now sitting there waiting for the Rare Earth Mania 2.0 to happen. But the blip that we saw in May, well, prices have retreated back from where that was, and the blip itself was a tiny, tiny fraction of what happened in 2009 to 2011 when rare earth prices went up 1,000 to 2,000%. And the juniors that managed to have advanced rare earth deposits, they underwent similar price gains. Now, for Casey Research to come out and sound the alarm about an imminent rare earth boom is very interesting because back then they had a very negative view about rare earths, calling them things like unobtainium and scandium and so on. And in fact, they put out sell recommendations on rare element at around $1.20 on its way to $20. And of course, the organization being what it was at the time, that somehow got translated into genius gains, even though the writers continued to be negative on the rare earth sector. In the end, they proved right because by 2012, prices had collapsed, and the rare earth industry suffered damage in that the end users who really suffered during the bubble, they ended up engaging in thrifting R&D and figured out how to make do with a lot less physical rare earths to get the same functionality, and this was a lot of demand destruction. But I think the benefits of that are pretty much evened out now, and if the electric vehicle trend were to continue, there's going to be a supply problem. And it's conceivable that even China's ability to supply the heavy rare earths will run into problems, in particular dysprosium and terbium. And these ones come from these ion absorption sands, clays, which are a product of weathering, and they sit there in those various provinces in southeast China. They're inefficiently produced. They're harvested in a very environmentally destructive manner, and you can't drill deeper to find more of that. Whereas Loftall itself, even though it's a relatively small resource, it is a bedrock-hosted dike system, and there's a lot more if you go deeper, and the sampling, geochemical soil sampling indicates that there are other similar trends in that area. So if you take the view either that electric vehicles are going to really take off and increase demand for heavy rare earths, or that the United States will bobble its relationship with China and create a geopolitical crisis where the supply shuts down completely for at least countries like the United States, then you will see soaring rare earth prices. The United States right now is trying to figure out how to reduce its dependency on Chinese supply, but the reality is we need rare earth prices 3 to 4 times higher than what the world has to pay to China right now for these deposits outside of China to be viable. So why KC Research chose now to spotlight Namibia critical metals and rare earth element, which now trades in the OTC bulletin board, I do not know. But Namibia Critical Metals has other things on the go. The management was behind Etruscan, which was an African gold explorer. They have been watching very carefully what Haya Dawn's Osino Resources Corp has been doing in Namibia, where it has been using a sort of an undercover exploration tool to track down gold-bearing structures, and has a discovery right now that has taken that stock to 70 cents. They're familiar with that approach. They have holdings in Namibia where they could turn their focus to gold away from the critical metals if it became worthwhile. So getting the stock higher into that sort of 25 to 30 cents where it should be in any case, it's a good thing, even though the reasons for telling people that it should go there now might be misguided at the moment.
John, thank you so much for the update.
You're welcome, Jim.
My guest has been John Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.